Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. On the show today, we pick up the Supreme Court's judgment on the Adani Group. Almost a year after the Adani conglomerate was hit by the Hindenburg set of allegations, and the Supreme Court's comprehensive verdict today coming as a relief to the stock and setting the stage for what should be an interesting 2024 for the Adani Group and its ambitious plans. And joining me to decode the impact of the judgment and the way forward is Sumit Agrawal, partner at Regstreet Law Advisors and a former officer of market regulator SEBI. We are also being joined by Shailinder Bhatnagar, editor for markets at Business Today Television, and during the course of the show we'll be joined by more voices. But before I go across to my guests, let's listen into two senior lawyers and their views, Siddharth Luthra and Mukul Rohgi. Let's take a quick listen in.
Hindenburg's report is malicious. It is intended to create a flutter in the market so that they make their personal profits. That's all. As far as the Adani Group is concerned, it has done nothing wrong, and today's judgment clearly shows that no part of their activities have been found to be under any cloud.
About 5 takeaways. The first is that the Supreme Court has upheld the SEBI report on 20 out of 22 instances. It has rejected the demand for an SIT. It is further stated that there is no conflict of interest. Fourthly, the Supreme Court has taken a view that there is a need for inquiry and investigation into the loss suffered by investors. And fifthly, that media reports are should not be the basis of newspaper reports. Media reports should not be the basis of PILs necessarily. The court has also expressed its reservation and its views on the OCC RP report as also the report of Hindenburg, and said that they would rightly and go by the report of SEBI, which is the concerned regulator, and it has found SEBI's systems and regulations to be robust.
So the key takeaways from a noted legal luminaries on what this verdict really means. And I want to come to Sumit. Sumit, take this forward from here in trying to explain to our viewers what really has the Supreme Court said today, because there's one camp of opinion which says complete clean sheet, and that got reflected in the way the stocks moved. There are some others who are saying, well, a clean sheet was never the ambit of questions that was before the Supreme Court. It was also to do with certain procedural matters. So demystify this ruling for our viewers.
Thank you, Siddharth. Basically, in the matter, there were certain petitions which were filed before the Supreme Court seeking various kinds of directions. There was one batch of petition which wanted Supreme Court to appoint a retired Supreme Court judge-headed committee to look into the allegations of non-disclosures, securities frauds and things like this. There was a second petition which was wanting that the investigation being conducted by SEBI should be transferred to SIT, Special Investigation Team, or the CBI. There was a third batch of petition which wanted the disclosures which have been made in the context of related party transactions to be looked into by a court-monitored, competent investigative authority. And there was a fourth petition which had wanted that Supreme Court direct registration of an FIR against the owner of Hindenburg Research publication. In this background, the question before the Supreme Court was that the regulations of SEBI and the manner in which SEBI is investigating whether there is any kind of inadequacy or a bias in SEBI factored by any external factors such as either the political considerations or a favoritism towards any business house, whether that kind of favoritism or the pressure is being there if one were to examine the documentation. In this background, Supreme Court extensively heard the petitioners and has found that there is nothing wrong in terms of the manner in which SEBI is investigating. There is absolutely no way where the petitioners have been able to produce some kind of a credible evidence, and mere reproduction of some third-party organization's report or the news reports cannot inspire confidence for the Supreme Court
right.
to exercise its power and supplant it on SEBI. So in
Okay.
this background, this judgment is a historic judgment and says that if you want Supreme Court to intervene, you have to come with some kind of a confidence inspiring evidence.
The Sumit, those are good points there, and the next quick follow-up question that I want to ask you, and before that I want to introduce Deven Choksey, Managing Director of DR Choksey. Devenji, welcome to the show. We have Sumit Agrawal explaining some of the legal intricacies, and Shail Bhatnagar is also here with me, and we'll join issue with you very shortly. But Sumit, come back to the larger jurisprudence issues of jurisprudence that get raised here, because you said it's a historic judgment. We saw an activist era of judgments which impacted telecom and coal, for example. And at that time the debate was that the court seems to be going into all matter, and now the court seems to have gone into great granular details, and like you said, 20 of the 22 issues have been. What about the remaining 2 issues? Is that an overhang, and what particularly are those 2 issues that have to be still be probed by SEBI?
Sure. So if one were to look at the finer details in the judgment itself mentions that even in those 2 investigations which have not yet been completed, the interim investigation report has been filed before the Supreme Court. And let's also appreciate the difficulties which are being faced by SEBI, where SEBI has been able to demonstrate to Supreme Court that they have issued various summons as well as request letters to entities which are in the foreign jurisdictions. And there seems to be some wall which SEBI is facing in terms of not able to obtain responses or the information which is required for SEBI to go ahead in those 2 matters. In this background, SEBI has asked that it is going to take some time, and therefore Supreme Court has directed that preferably within 3 months, SEBI should complete those remaining 2 investigations out of 24.
Okay.
With respect to the other 22, Supreme Court has said that they are completely fine in terms of the process and the adequacy of the efforts being made by SEBI.
Okay. So in some ways, Deven Choksey, this is also a ringing endorsement for the market regulator, because the market regulator's approach in such a sensitive case has also been endorsed. But I want your key takeaway, especially on that one point about protecting investor interest. Now that Devenji is a very broad statement. What is being said here? Read between the lines for us.
Well, I think my understanding is as much as what has been stated out there. But I think the more importantly, the important point which has been communicated out there is that the regulator must have the ability to reach out to the jurisdiction in which I think the subject company Hindenburg has been operating, because it is this jurisdiction I think which they cannot reach out to, and I think the outside companies have entered into India jurisdiction and they have created havoc into the marketplace. The Supreme Court has also observed very clearly that they want to make sure that I think the interest of the investors be protected by the regulator. I think these are 2 important points I think which I gather I think are important for the regulator to take the next cue from here. Currently, as we understand, despite of having the integration with global regulatory system, Indian regulators cannot reach out to the intermediaries who are operating outside the regulation. Whereas I think entities who are operating outside the regulation can influence through their acts the entire price mechanism or the movement into the Indian regulatory markets. I think this is a kind of a shortcoming into the system, and this shortcoming is being asked to be cleared. If they do so, and in my viewpoint, I think as I call it as a white collar mafiaism, will be stopped going forward. Currently, I think this kind of white collar mafiaism is basically happening systematically in different parts of the world because of the lacuna in the system. I think that part is likely to be taken care of if this regulation starts prevailing. Fortunately, I think at this point of time, the company has and the group has come out absolutely clean from any kind of compliance issues or any kind of governance issues, I think from the regulatory side. And that inspires more confidence to the investors at large, including global investors.
I'll come back to you, Devenji, but Sumit, before I go to Shell, I want you to quickly explain this point. You know, one of the allegations was about, if I were to just summarize it, around tripping in some ways, using shell entities, and the allegation was that promoters and promoter linked entities are bringing back their own money into Adani Group shares, and because this is from outside jurisdictions, that is causing a problem. Is that one of the key issues that still remains to be settled? What is the fine print there, Sumit, in your understanding?
So Supreme Court, in fact, has not gone into the factual aspect of the matter. The remit of the Supreme Court was limited to what was being filed in the pleadings. And in the pleadings, while making this argument, the petitioners relied upon one letter from the Director of Revenue Intelligence, which was the Income Tax Department letter some years back, in the context of saying that some power plant valuation has been overvalued. That issue, when it was raised, Supreme Court said that that issue has already been settled and closed by the same authority itself, where the adjudicating authority within the tax department had nullified those allegations. That issue was settled by the appellate tribunal as well as the Supreme Court also. Agitating some past issue and connecting it with the share price manipulation without any other information or evidence is not what something Supreme Court found in favor of. In view of this,
Sumit,
they rejected this
Sumit, for the sake of time, what about the other allegation that share prices of Adani Group entities were being sort of front run and rigged by entities allegedly linked to the promoters in some way?
So on this aspect also, Supreme Court has been very clear. It says that in fact, whether the investor's interest, which is prime for this entire proceeding to be protected, Supreme Court wants, if Hindenburg report publishers or even the short sellers,
right,
if their activity has been violative, there must be an action on them.
Okay. Shell, come in at this stage and let's open it up with Deven. In terms of the 2024 pathway for the Adani Group, and you were covering the response of the market through the day, what do you see happening from here as far as the Adani Group is concerned? Because this is almost 1 year ago when this Hindenburg hit them, and we saw a phase of conservatism. We saw a phase where Adani Group decided that it will focus on profitability. It perhaps rolled back some of the more aggressive expansion plans. What is going to happen from here forward, Shell?
Good evening, gentlemen, and thank you, Siddharth, for having me on this show. Let me just start with one data point which I'm sure will enthuse us all. The retail investor and investors in Adani Group added 64,000 crores in market capitalization after the clean chit from the Supreme Court came in. And this is a wonderful development because it leads to two things. One, the regulatory overhang across the group is now over. The companies can now start the business of expanding, whether their balance sheet or whether their borrowings, and the fact that a lot of the shares from the group had underperformed fairly dramatically in 2023, which was actually one of the best years for Indian capital markets. So 2024 will for them bring a very, very nice performance when it comes to over the next 11 months. And this is what is particularly heartening, that over the last 8-10 months or so, Siddharth, when this crisis broke, it was the retail investor that saw bottom fishing on many of these counters. And if you see the shareholding pattern, they have actually voted with their wallets and bought these shares at rock bottom prices, and they have been one of the biggest beneficiaries of not only today's uptick but the price expansion that has happened over the last eight
Right.
odd months or so. So, three cheers for the retail investor from now on, and of
Right.
course, the corporate overhang is over.
Devenji, the 2 points that Shale makes. One, that in a market which was a fantastic year for 2023 for the Indian markets, the Adani Group underperformed post the Hindenburg issue. It's made a very smart gain today. But what in your sense is the outlook for 2024, particularly given that there are indications in the recent past that the group will continue to invest and invest very heavily. In fact, one number that's been said by management is 7 lakh crore, $82 billion in the overall infrastructure space.
Yes, I think look at it from the numbers point of view. In the trailing 12 months, the business of the group has produced somewhere around 54,000 crores of EBITDA. And I think this is growing at the rate of around 20% rate of growth on annualized basis. What it means is that respective category of assets which they have, be it port asset, power asset, transmission assets, road asset, airport assets, each of these assets are generating significant amount of cash flows on an ongoing basis. That's the first point. And because this cash flow generation is not happening for 1 year, this is basically a visibility for next 25 to 50 years. That is what is basically giving a good amount of clarity to the investor, including the global investors who want to invest in India infrastructure. I think to them, this particular point is giving absolute amount of clarity. Now, when you convert 7 to the amount of money that I think is being talked about for investment, 7 to 8 lakh crores, I think that particular amount of money is on the back of this cash flow which is being generated at the year on a yearly basis at the rate of 20% CAGR growth. In my viewpoint, I think currently the net debt position of the group against this 54,000 crore of EBITDA is little less than 4 times the position I think on the EBITDA, which means that I think group is comfortably placed in paying off the debt going forward from this particular period. Now, if these financials has to be reflected upon, then in my understanding, every asset which is being developed, which is being further grown, or organically as well as inorganically, I believe that I think the investors would probably have a significantly high amount of conviction from the investment point of view because these assets are cash generating assets. One last point which I want to add here. What my understanding is that in 20 years, I have seen this infrastructure business growing. When they started building this infrastructure, at that point of time, the cost of assets that they created were at a value rupee to a dollar at around 55 average. I'm taking. Today, that value is 85 to 85 rupee to a dollar. And going forward next 20-25 years, it is going to further grow in this particular area. So obviously, I think any investor who would buy these assets, they will pay price looking into account, I think, the tomorrow's value. And that's where probably I think you are likely to see higher amount of inflow of money into the group for the expansion. And that is where probably it will get answered that how would they get funded when they have such a large amount of expansion program. So in my understanding, I think it's a significant amount of clarity which the Supreme Court has provided to global investors to come to the company and the group because there is no compliance issue, there is no governance issue which has been found by the court, and that is where probably I think we are likely to see acceleration of investment taking place into the group.
Deven bhai, Shell will also jump in with a question, but a quick follow-up. Are you therefore saying that from an investor point of view, more debt on the books of Adani, if it were to happen, I'm not saying that that is the plan right now, and aggressive expansion is okay because, you know, when Hindenburg happened, one of the big things was debt, and now no one's talking about the debt levels of the group.
Even when Hindenburg happened at that point of time, also the debt situation was not precarious. Let me put it this way. Because these assets are cash generating assets, and any asset which is cash generating, I think there are enough amount of financiers available in the world who would like to discount those assets on DCF basis. Unfortunately, I think the Hindenburg issue happened at that point of time. I think the doubts were raised. I think whether the substance was something else. In my viewpoint, as long as I think the assets are leveraged, I think 4 times to the net worth, I don't see this as a threat. Because infrastructure assets, I think as long as I think they operate with a discipline of 4 times to the shareholders' equity or the net worth, I think that remains as a safe criteria to judge the company. Anything over and above that, I think one would call them as an over leveraged position. But as I see it, I think because the 20% compounded growth in the EBITDA is coming in on a 60,000 crore worth of base of EBITDA of this financial year to be, in my viewpoint, I guess I think it is very easy for the company to keep on expanding, combining this entire EBITDA into the investment program that they are following.
Shall take it from here.
Siddharth, I'd just like to add to what Deven Bhai has mentioned on the debt. Remember, over the last 12 months or so, the Adani Group has also prepaid a lot of overseas debt just to, remove this constant headache of being questioned ad nauseum about a case that was under consideration under the Supreme Court. So, one, your debt to equity picture has actually improved over the last 12 months or so, and even at the peak of the crisis, the overall debt of the Adani Group as a percentage of total credit outstanding in India was less than maybe 0.6 or 7%. It was never a risk to the banking theme. And what has happened over the last 12 months or so, that public sector banks have improved their balance sheets. We are seeing a lot of credit growth, as also a lot of cleanup on the balance sheets has happened. Therefore, another sort of unreported part of this particular development has been that public sector banks have heaved a sigh of relief, and all those banks, including SBI, actually showed a very, very smart uptick in a market which was correcting substantially. So this is another theme that investors are now going to focus on. The overhang, the grey cloud that was there on the banking sector and corporate India has now been taken away. And Deven Bhai would be better placed to talk about individual companies where he sees merits in purchasing prices at these current levels. Deven Bhai, within the 10 stocks that make up the Adani Group, which are the two favorites that you would count giving outsized returns in 2024?
So I think importantly, the port is remaining a consistent performer. Already with about 14 odd locations at which they are operating, including the overseas location that they have acquired. The port business remains absolutely very convincing with more than 500 million metric tons of capacity, cargo handling capacity that they have on respective ports. This is one company, or this is one particular business, I think, where the compounded rate of growth will increase because of the growth in the business of the economy as well. Economy is growing at the rate of 7.5%. So would be, I think the trade would increase on the port, and that is a simple conclusion. On the other side, if you look at the green hydrogen business, I feel that I think port is an important asset, a key asset for the group, largely because of the fact that I think when you are on the port, when you are accessing the water, sea water, and you are basically using the sea water for the purpose of making the green hydrogen, in my viewpoint, I think it's a fantastic amount of proposition which is going to sweat this asset even faster than ever before. So to a greater extent, I think port remains, I think, a very convincing story for me from investment perspective. They will grow at a steady rate of growth of around 15 to 20% in my understanding. They will not give a quantum jump the way people are expecting, but still I think 15-20% kind of a growth rate is a good enough growth rate for somebody to hold the investment for 10 years. Second important business, which I feel I think is also equally important, though I think one would argue for looking into the renewable energy, green hydrogen, etc. That remains, I think, an interesting proposition. But more importantly, given the situation, the energy solution business, I think, remains absolutely convincing. Over there, the transmission of energy, which is assuming higher amount of EBITDA of more than 90%, is giving a good amount of cash flow visibility in the company and the group. So their ability to expand the business will increase because of the higher amount of cash flow generated into this business. So these two businesses, I think they remain a little bit more preference or little bit more preferred by me into the investment portfolio because of the higher amount of visibility of cash generation. Rest of the businesses are good, but at the same time, I think they are also demanding good amount of investment which is significantly higher. So I think one will be calibrating, I think looking at the entire approach with a little bit of calibration on the investment side into the other aspect of the businesses.
Okay, let's get Siddharth into this conversation. I've shared an Excel sheet with you, Siddharth, and look at how beautifully this dovetails into what the market is understanding. Adani Ports is the least affected counter. It is just 4% away from its all-time high. If you look at the price today, which was about 1,094, and the all-time high is 1,144. So it's just a whisker away. And it's Adani Energy Solutions that's still 72% away from the all-time high that it struck somewhere early last year and its current market price. So you can call that as an opportunity as far as Deven bhai is concerned, or you can look at the way how prices may actually move up from current levels. So Adani Ports and Adani Energy Solutions is what Deven bhai likes in terms of stocks within the Adani Group.
I had a quick follow-up, Shell. I had a quick follow-up with Devenji. Devenji, not with respect to specific stocks, but are we seeing a gold rush moment in renewable green energy space with so much money, so many announcements? But just as EV is teaching us, this reaching scale and significant profitability is likely to take much longer. So are valuations and investors getting ahead of the reality?
Well, I think if one is investing into infrastructure business, one is investing for next 20 years. Likes of LIC, likes of any sovereign fund for whom this particular appetite is very, very high, they would invest, I think, into the infrastructure business, keeping in mind next 20 years growth program for them. As far as renewable aspect is concerned, I think the bigger conviction will come in coming years and coming quarters and coming year, largely because of the concluded G20 meeting in September by the Prime Minister, wherein he could manage to convince the Western nations to invest and allocate about $5.9 billion, I think, immediately for the investment of, I think, renewables into the emerging markets. Now, this money is a starting point, according to me. With this money coming into the system, in my viewpoint, I think we are likely to see higher amount of growth program being undertaken, particularly in a country like India. India is being seen as a country where we are being called as a hydrogen capital of the world, or likely to be called as hydrogen capital of the world, given the kind of program, that integrated program that we have undertaken. On one side, we are implementing the solar energy farms, the wind energy farms, the biogas, compressed biogas. And on the top of it, I think we are running the electrolyzer process to convert the seawater into the hydrogen and hydrogen into the power. Now, imagine a situation where you have in next 5 years, 10 years time from now on, the power which is getting generated out of green hydrogen, resulting into significantly bringing down the cost of the power which is being produced in the country compared to the conventional source of around 8 to 10 rupee per unit. It is expected that I think it may be brought down to 2.5 to 3 rupee per unit. This is going to be a disruption in itself at some point of time going forward, because the power consuming businesses, particularly I think the ones which are connected with the refining business, or for that matter petrochemical business, or for that matter metal commodity business, chemical commodity businesses, I think all these businesses would probably, I think, find themselves at a significant amount of advantage because of the cost of energy coming down, and at the same time their competitiveness increases in the global marketplace. To me, this is going to be a game changer. To me, I think this is going to be attracting a lot of new money into the economy, and this is where probably I think one will have to keep an eye on. Of course, it's a long drawn game. It's not going to be happening in 1 or 2 years. Right. But those who invested in Adani, I think 10, 20 years back, today I think they're reaping the fruit. In my viewpoint, I think in next 5 years, if you want to reap the fruit, probably I think this is the time to invest with a deep pocket that you have. I think you can definitely succeed out of it.
Excellent words of advice, Deven bhai. And one last question to you as we wind down the show. There couldn't have been a better New Year gift for Gautam Adani, and the tweet that he put out after this, and he mentioned Satyamev Jayate. I am reminded, Deven bhai, of almost 20 years ago when Shailendra and I would cover the telecom sector, that when the BTVL Bharti IPO happened, market experts like you at that time described that IPO as a market making one. It kind of set in things various motion. With the Adani verdict, does it kind of provide certain emotional, sentimental support to the markets, which hopefully will continue to perform the way they did in 2023?
The sentiments do change over a period of time. But more importantly, I think with this kind of verdict coming from the Supreme Court, in my understanding, those who have been waiting for investing into India, they would probably find higher amount of conviction. That is the first point. Adani Group as a group, I think, is the best proximity to invest in India infrastructure story which the government has created. Government wants to invest 142 lakh crores by 2030-31 into the India infrastructure in different asset classes. And Adani Group has demonstrated the ability to execute the infrastructure projects far better than anybody else as far as I think this game plan goes. So to a greater extent, I think this is going to create the confidence level for the global investors to bring in money. To a greater extent, I think the domestic institutions, which are deep-pocketed institutions like LIC, would probably find merits in investing into this group because I think the court has given the clearance. So even on them, the questions which were asked earlier in the parliament, probably I think that goes out, out of the system. According to me, I think this is going to be a game changer movement. According to me, I think this is going to create the path for further growth going forward in coming 5-10 years.
All right, Deven, Choksey, thank you very much for your views, and thank you for joining us at the beginning of the year on what is clearly a momentous day for the Adani Group, Gautam Adani, and the wider investor community that has invested in this stock. Shailendra Bhatnagar, thank you very much for your time, and also Sumit Agrawal, thank you for joining us to explain the key legal points of the Supreme Court verdict on the Adani Group. With that, it's a wrap on this show. If you've been, thank you very much for watching.
Hello and welcome to yet another episode of Tech Today. In fact, this is a very special one because 2023 draws to a